All right, it's an awesome day, and it's time for a coaching call. And I want to start this session by really taking a look at newsbtc.com. All right, newsbtc. This is a website you can always use to get information, fundamental analysis, a little bit of fundamental analysis. So when you go to newsbtc.com, refresh it for updated data. You're gonna just find out the coins that are trying to make some noise. There's a lot of noise about. Say climbs 16% as market. Very all right. So there's a coin called Say, and it seems to be on the rise. Now I don't know if it's in Royal Q or not, but let me check. If it's in Royal Q, I think I've seen it. It's Royal Q. Yeah, it's right there in Royal Q. And this is a news that just came out, right? Because I was on this site a moment ago. So let's go read details about Say. By the way, let me go to let me go to our tool and let me look for Say. Say USDT. All right, so this is the Say that we have been talking about. So this is a little bit of fundamental analysis. You might want to always check that website when you're thinking of coins to trade. All right. No holds barred. We just share what we know. All right, so 60% as market wobbles post Bybit attack. So if you notice, even if you gave a good signal and the market just will go against you sometimes. Why? Because there's some fundamentals that are racking up the market. All right. So the Bybit attack sent negative waves on people trading all sorts of coins on Bybit. Most of them wanted to stop all their trades. Most of them wanted to pull out their monies and all of that. Of course, because of the hacking attempt, they had to, freeze a lot of things to make sure they protect Bybit. So that is, part of what's affecting some coins, and they go negative. All right. So what's the news here? The cryptocurrency token has actually stood out as a noteworthy example of market endurance, which was further confirmed by the token posting a solid 60% within the previous week. All right. All right. All right. Okay. So you can read this up. And I'm going to just use that coin to do the first part of the topic today. The first part of our topic today, remember, ladies and gentlemen, is the discussion about the 50 EMA strategy. All right. So, because most people have free versions of TradingView, they can't put a lot of indicators on TradingView. So remember, you can TGS strategy, you can watch Bollinger Band and KDJ on your Royal Q app on 15-minute chart, right? So you can then come to the same 15-minute chart without Bollinger Band and KDJ and just drop the 50 EMA. How do you get a 50 EMA? By the way, let me tell you this. From the survey I did, despite teaching this thing up to 3-4 times for free in the groups, I find out that only one person says that they are using it. And 11 persons said, no, they don't understand it. That they went to the mountain to pray and they taught, when I taught the team. All right. So going to the mountain to pray, just like I put it in the survey, just any excuse you want to give for not knowing it. So once again here, we have recorded versions of this, but once again here, because this is so important, I want to give you simple ways of you looking at the market and taking trades. So one of the things you're going to do is simply to go to the indicator location and type moving average exponential. So moving average exponential, just click on it once and it's going to drop on your screen. So it's right there. I'm going to delete volume because that's not what we're here to do. So EMA is showing you 9. All right, so go to settings and don't worry about the smoothing. The smoothing, just leave it the way it is. Just go to the length, not the length of smoothing, but the length just under input, and change this to 50. And that gives you the 50 EMA. All right, then I want to change the color because yeah, we can make this one blue. That's fine. Blue is fine for the 50 EMA, and that's it. Okay, I like to make it thicker sometimes to make it thicker. So I just click on this and that's it. That's it. Now look at the history of this asset. There's no perfection. There's no perfection in trading. And I'm going to tell you this. Trading is not about perfection. Even when you do a well-trained training, like you go through the good buy to floating loss, it's not about you being correct. It's about you understanding your entry and your exit. It's about you knowing all the various factors at play in the market and seeing when a couple of factors are in your favor. All right. So look at the historical movement. If you were just using the 50 EMA, by the way, with the 50 EMA, when price is under the 50 EMA price, the market is bearish. When price is above the 50 EMA, market is bullish. So right here, price cross the 50 EMA. If you just go in blindly and say this is bullish, 3%, 4%, if you target any noisy place here, you could just take a simple 3% or 4%. Then it came back down below it. Then it came back up above it again. All right. This is how you can just be making money always. All right. You came in here, you targeted somewhere here, noisy, where there's a swing here. It just targets 3% again. It came down below it. Let's just imagine you hurriedly entered here. No problem. You hurriedly entered here. Market went against you. You targeted this place. Yeah. You saw it could give you a 3%. Yes, it could give you a 3%. It took the 3%. Of course, market went against you first and vomited the money. All right. So this is exactly what I want you to know. So within a space of 2 days, 20 hours. All right. But let's just say 3 days. Within a space of 3 days, you have made 433, 10%. 10%. Now, for each of these trades, where would your exit point be? All right. So remember, you entered here, and this is the nearest swing low, and there's another swing low here. So what I would do is, for this trade, I'm not going to bother myself. I'll just say if it crosses here, I'll exit, because you have to be tolerant with this market movement. And you can see it didn't get down there. It just went straight and delivered. And of course, every trade is a risk. Don't make anybody make you think that every trade is not a risk. Every trade is a risk. So you are willing to risk, taking a 20% with trade going against you, 20%, or less. Then if you use margin calls, it brings down the percentage risk. Okay, so that's basically what I want you to know and garner from this. All right, that's what I want you to garner from this. And if you have started here after the long deep, all right, the moment price crossed here, if you had entered here without thinking, without worrying about analysis, and you'd have gotten, this was crazy. This was a lot of money. You might have wanted to take just 3% here, but oh boy, look at 7. All right. And it came down under it again and went above it again. This is literally stuff I could charge you to teach you. All right. But hey, come on. I can charge you to teach you technical stuff that's more difficult to understand, but this is super easy. All right. Everybody should be using this and making money without waiting for signals. All right. You can do this. All right. So that's it again. Under 3% there, gotten. Went below you went in. So you went in here. All right. Now this is interesting. It came up here. You went in here. You wanted to target here for 4%. So what happened? Yeah, it delivered the 4% later, but took some time. All right. Took some time. So here's the thing. When you enter this trade at this point, you knew that your exit point was here, here, or here. All right. So you have to be like a robot. And you tell yourself, if the trade, since I'm entering here, and so I have this here, all right, I'll take it from here. If it hits here, I'm out. All right, if it hits here, I'm out. And it did hit there and went below there. So you just take it out. It's fine. So you lost how much in this instance? I mean, you made 7%, 3%. Then this instance, you lost about 5%. All right. Now you go back in. You go back in and what do? You wait for another cross. Now this is the cross. You got back your 5%. Super easy, right? Super easy. The 5% loss you took here, you got it back right here, and you stayed in business. So if you didn't take the loss at this point, you know what would have been happening? You would have been praying on the mountain. You would have been begging, I beg, God, make the price go in my favor. Yeah, it did go in your favor, yeah. And at this point, you would have gotten out with profits. But look at this. You would have waited for, let's say, how long? You would have waited for 14 days, 2 weeks. You would have waited for 2 weeks for the trade to sell off. All right. You will be doing nothing, just waiting for that trade to go back to profit. So sometimes when you take a loss, keep your eye on that coin because there will be opportunities to buy it in. That is simply what I want you to know for the 50 EMA strategy. It's just that simple. It's just that simple. All right. It's so simple. Then, of course, remember, you mustn't take stop loss. Some people don't want to do stop loss trades. That's fine. Just let your trade run. Tolerate 20% drop in price and let it be. After some time, it's going to sell off and you're still back in the game. All right. But for those who really want to have the mentality of traders, then sometimes they take a loss and then position for the next win. All right. So this is say, right? And so another thing you can add here is another EMA, which is called the 15th EMA. I'm going to be teaching these two EMAs because it's going to help us make money. So go back to moving average exponential or moving average exponential. Click on it once again. And all you need to do now, you have another exponential moving average, 9 EMA. So you click on the settings. I'll change this to red because I want it to be different. And I'll also make it tick. And under input, I'll just change this to 14 EMA, 14. Leave the one down here, just leave it the way it is. The standard deviation and all that, just leave it. And this is another thing you could decide to trade with. All right. It's now your choice. So let's go look at the trades that we've plotted out earlier. Let's go look at those trades. Now, you see, like we said, if it crossed, you would have entered here. Once price crossed the EMA, you would have entered here. But you know what? Some people will say, I will wait until until the 14 EMA, which is red, crosses the 15 EMA. Now, for such persons who want to wait, that means, let me add this. This is where they would have entered the trade, all right? They would have entered the trade here when they noticed the cross. Now, let me change this. So they would have still gotten 5%, 6% here, super easy. Let me just give it a 6%. Let me change the color of this so it will be different from the other ones we were drawing. All right, thank you. Okay. All right, so this is just a similar entry. I mean, the person using just this 50 EMA entered here. You waiting for the crossover, you entered here. All right, now this is the other trade. Look at this other trade. This was a good trade because both the 50 EMA cross here, followed by this one right here. But another thing you need to see is sometimes when it crosses the 50 EMA, when the 14 crosses the 50, you might wait for a little retracement for price to kind of touch the 14 EMA. That's something you can decide to add to your trading. But observe it. You learn by observers. All right. Now, that's an example. You entered here and blah blah blah. The trade did what it did, and all that. All right. So let me just move this a little to the left so that you can see what I mean. So you made the money here. While the other guy who came in a little later would have entered here if you rushed in, or you would have waited for the candle to try touch it. If you did, yeah, you could have gotten a good what, 4%, yeah. Okay, now look at the cross here, and the touch. Remember, it doesn't mean that you must always wait for the touch. I'm just using this as an example based on this illustration. So this was also another failed trade. So even with the waiting for the crossover, market went sideways. All right, and hit the stop loss for those who want to use the stop loss. And now you come to this level where you say, let's see, you waited for the crossover, right? The crossover happened here, waited for it to touch. And when it touched, you just entered your trade here, and you would have gotten a good 3%, just 3%, if you follow the exact same movement. Not bad. All right, then here, EMA, price plus EMA, you entered earlier, like we analyzed. But now, waited for this to cross, and you entered, came to touch the 14. You entered. How much could you have made? Yeah, could have made some good money. Same 2%, 3%. So you see, it worked. Now price came down here again, and it crossed here. Could have entered here again and made some money. All right. So use this how you wish. This is the easiest way to trade. Remember, Royal Q is a vehicle that makes trading very, very easy. You don't have to analyze. You just go in, make your money, and you're in the game. All right. You make your money and you're in the game. So that's very, very important. At least we are 11 persons here. The next time I ask, have you used a 15 EMA, 14, 50 EMA, 14 EMA? I mean, I hope people will not be asking me or telling me that they haven't. This is super easy. Just go put it on your trading view. By the way, if you don't have a trading view account, follow the trading view trading videos. Just go create a trading view account, work with your sponsor, and start getting used to this EMA tool on trading view, because it will help you. It will help you to succeed. All right. All right, so that's the 50 EMA strategy. And we gave you a bonus of also using the 14 EMA strategy. So I'm going to stop this recording now.